Welcome back to Market Matters Media, your go to source for in depth financial insights and analysis. In today's discussion, we'll delve into the intriguing predictions made by British economist Simon Hunt regarding the economic landscape of 2025. Hunt, a distinguished economist with vast experience in various nations, offers a unique perspective on the global economy. His forecasts for 2025 have the potential to reshape our understanding of financial markets and their future. Hunt envisions a sequence of events leading to what he anticipates as a depression in 2025. At the heart of his forecast is a significant factor: war. This isn't just a regional conflict but a global scale conflict involving major countries backing various nations. The consequences of this war are not limited to geopolitics. They extend to the markets and economies. Central banks, particularly the Federal Reserve or Fed, will have to adjust their policies to accommodate the impact of this global war. Currently, the Fed is engaged in quantitative tightening, effectively reducing the money supply. Hunt predicts that the Fed will switch back to quantitative easing due to both the war and anticipated financial market accidents. This shift to quantitative easing involves injecting money into the financial system, and it's expected to coincide with a short-term correction in the financial markets. Hunt believes that this change in policy will drive stock prices higher, with stocks possibly doubling in value up to 2025. However, the twist in the tale comes after this period of stock market growth. Hunt forecasts a depression in 2025 that will only impact the economy but also lead to a stock market crash. This calls for a strategic approach in timing the market to maximize gains during the market upswing and avoid losses during the impending downturn. Another aspect of Hunt's prediction relates to the US dollar. In the short term, he expects the dollar to experience fluctuations, but in the long term, he foresees a progressive decline. This decline is attributed to the devaluation of the dollar through monetary policy. Over the years, the dollar's value has eroded due to inflation, raising concerns about its long-term viability. Hunt's forecast raises the question of whether investors will continue to hold the currency that steadily depreciates. If not, they may explore alternatives. In this context, the rise in inflation since 2020 is seen as just the beginning of a more significant inflation wave. Hunt suggests that by 2025, the U.S. Consumer Price Index or CPI could surpass the 1980 peak of 13.5%, harking back to the inflation levels of the 1970s and early 1980s. These inflationary pressures, coupled with soaring food prices driven by drought in Europe and a 90-year drought cycle expected to impact the U.S. Midwest in 2024, create a challenging environment. Hunt's forecast paints a picture of asset prices plummeting at rates reminiscent of the 1929 to 1932 era. The consequences extend to commodities, with Hunt expecting a collapse in copper and the other metal prices. The overall economic environment is anticipated to shift from debt-driven growth to equity-based growth. Now, it's essential to approach these forecasts with a degree of caution. Many variables and assumptions underlie Hunt's predictions, making them subject to change. Warren Buffett's strategy of not attempting to time the market is a wise perspective. However, if Hunt's predictions do materialize, considering high growth and innovative stocks during the market upswing and being cautious during the impending downturn may be prudent strategies. The year 2025 holds great uncertainty, and while Simon Hunt's predictions are intriguing, they are by no means definitive. It's crucial to remain cautious, diversified, and well-informed when it comes to financial decisions. The global economy is a complex web of factors, and as investors, it's our responsibility to navigate it with care. Economists and financial analysts have long grappled with the intricacies of predicting market trends and economic conditions. The complexity of the global financial ecosystem, coupled with the myriad factors at play, means that forecasting future events is an inexact science. Hunt's forecast is based on his unique insights, but it's essential to remember that it's just one perspective in the sea of diverse opinions. The global economy is influenced by numerous variables, from geopolitical events and monetary policy decisions to technological advancements and consumer behavior. The interplay of these factors can lead to unexpected shifts. A significant part of Hunt's prediction hinges on the role of central banks, particularly the Federal Reserve. While the Fed's policies undeniably influence the markets and the broader economy, their actions can be influenced by an array of data and circumstances. In the realm of monetary policy, adaptations are frequently made in response to economic indicators, inflation expectations, and employment trends. Predicting how and when the Fed will make pivotal policy shifts is a complex task. The central bank's decisions often reflect their commitment to maintaining economic stability, fostering employment, and managing inflation. While Hunt presents a scenario where the Fed transitions back to quantitative easing, the actuality of such a transition depends on a host of factors and is subject to change. Another facet of Hunt's forecast centers on inflation, with expectations that inflation rates could surpass levels last seen in the 1970s. Indeed, inflation is a critical economic indicator, and it is closely monitored by central banks. However, the precise trajectory of inflation is highly uncertain and subject to numerous influences. Inflation is not only a domestic phenomenon but can be affected by international events and supply chain disruptions. This makes forecasting the precise path of inflation a complex undertaking. It's also important to remember that the Federal Reserve and other central banks have a mandate to manage inflation, and they can adjust their policies to counteract inflationary pressures if they arise. The predicted rise in food prices, driven by droughts in Europe and a drought cycle in the U.S. Midwest, is indeed a concerning aspect of Hunt's forecast. The agri-food sector plays a pivotal role in global food security, and any disruptions can lead to shortages and higher prices. However, it's important to acknowledge that governments and international organizations are deeply concerned about food security. Steps can be taken to mitigate these challenges, such as investing in sustainable agriculture practices and ensuring efficient food distribution networks. As we examine Simon Hunt's predictions, it's important to view them in context. They represent a particular viewpoint based on a set of assumptions. The future is inherently uncertain, and while economic forecasts offer valuable insights, they should be considered alongside a wide array of other economic analysis and indicators. The dynamism of the global economy necessitates prudent investment strategies. While trying to time the market perfectly is a risky endeavor, there are sound approaches that investors can consider. Diversification is a time-tested strategy that involves spreading investments across various asset classes. This approach can help manage risk and optimize returns in various market conditions. Moreover, taking a long-term perspective and conducting thorough research on the assets in your portfolio is crucial. Understanding your own risk tolerance and investment objectives is paramount. For instance, if you're considering investing in stocks in the coming years, it's wise to explore different industries and sectors that may weather market volatility better. In the end, the key to navigating the unpredictable terrain of the financial world lies in staying informed and adaptable. Keeping an eye on economic indicators, policy changes, and global events can help you make informed investment decisions. Moreover, be prepared to adjust your strategies as the economic landscape evolves. If you found this discussion enlightening and thought-provoking, don't forget to hit the like button and share it with others who may find value in this perspective. Most importantly, remember to subscribe to Market Matters Media for more comprehensive analysis, economic insights, and financial strategies to guide you through the ever-evolving world of finance. Thank you for being a part of Market Matters Media. and we look forward to bringing you more invaluable content in the days to come.